Good evening, ladies and gentlemen. John Kelly for Options University on Sunday, October 9th, 2011. A disclaimer, trading always has been, always will be risky. Learn what you can with Options University and give yourself that edge to put the winning trades in your favor. Keep your losses to a minimum. Economic and European news. Moody's downgraded the Portuguese banks on Friday and announced they were considering a downgrade of the Belgian banks after the failure of the bank Dexia, which was owned by a Belgian, French, and Luxembourg consortium. Dexia owned bonds from all of the southern European countries, Portugal, Ireland, Italy, Greece, and Spain, and failed last week. Chancellor Merkel of Germany and Sarkozy of France met today, Sunday, and announced an agreement to help all the banks. They would not release any details of the agreement, but it's known that France wants to use the Economic Stability Fund that they've just cranked up from 250 billion euros to 400 billion euros, but Merkel doesn't want to do it, so they still have to work out the details of what's going on. However, the markets opened at 6 this evening, and they opened slightly positive, so it's not a there is no fear of an impending failure at this time. However, you got to remember tomorrow is a bank holiday, and the bond market will be closed. 1/4 of the potential traders that are out there won't be there, so it'll be a very slow day. The senior traders are probably, brokers are probably taking a 3-day weekend and turn their books over to the junior brokers who have been told if they want a job on Tuesday, don't do anything except sit on their hands unless there's disastrous news, and then close out all the positions. So expect very little trading, maybe a move up or down, but of slight nature, but no volume behind it. And speaking of the volume, the 4 days that we had, 5 days that we had last week, initially we had good volume on that turnaround on Tuesday as everybody cheered what was going on. But as you can see, the volume trailed off as the week went on, and we rose on decreasing volume. That is not good. And we essentially had a doji on Friday. However, the one good thing on the NASDAQ is it closed above the 50-day average. If it can hold above that 50, then we could see an assault on the 200-day moving average. But the predominance would be with a lower high, and if this goes down, a lower high along with a lower low, we would be in a confirmed downtrend, and we would go down from here. So keep an eye on the volume, keep an eye on where these charts are going over the next couple of days. What's been going on in Europe with not if Greece is going to fail, but when Greece is going to fail? Where has the money gone? It's gone into the dollar. You can see here from these skyscrapers that the money has been pouring in from the European banks into the dollar. The Fed and Geithner has said use us as the strength of last support, and the dollar really is, in light of what the Fed's been doing to it, the tallest midget standing in the room. It is not all that strong to begin with, but that's where the situation lies. It's nothing. There's nothing positive about it other than they have messed things up horribly, and we're going to give you some long ideas here for if this rally continues, and ideas for a short if and when it does roll over. Monday, as I mentioned, bank holiday, government offices, bond market closed. No news of any kind, no earnings reports to start the quarter. It comes on Tuesday. We get FOMC minutes at 2 in the afternoon, and then after the close, the start of the S&P, or the Dow stocks, the Alcoa aluminum. And expectations are high for Alcoa. They're expecting a tripling of the profits. And then ADTN, after the close, also will be reporting. So that really gets the earnings season and the week off. Hopefully it's going to be good. Wednesday, again, a very light economic week. We get the MBA mortgage index at 7 a.m., which really will not move the markets all that much. And JP Morgan will be be reporting before the open. Now, I have two indicators here. One says Thursday morning before the open. One says Wednesday morning before the open. So check and see the announcements. I won't be reporting again to you until Wednesday night. JP Morgan is the financials. The financials are in a lot of trouble right now, and the market's not going to go anywhere without the financials. So this will be very important. Thursday, a ton of information. Jobless claims, trade balance, crude inventories, and the Treasury button. And before the open, the trade that Doug Robertson has been doing with FAST, and then the trade that we did with Google as well, along with Fairchild Semiconductors before the open. Google is the big one after the closing. This will be very interesting to see how this swings, how we go into Friday. And Friday morning, retail sales and then Michigan settlement. No real earnings to talk about. So sort of an important week, but a slow start to everything. Leisure retail sector is still, believe it or not, the most bullish sector out there. The XRT just above the 50-day moving average, and the 200 is just above that at a value of 51. The XRT actually is at 48 and change, but it just closed above that 50-day moving average. The 50-day buy to open put call ratio is still flat, indicating no accumulation by the hedge funds. Amazon, Green Mountain Coffee, Ralph Lauren, and Lululemon are your stocks to keep an eye on in that sector. Large cap tech still bearish. Q's closed Friday just above the 50-day moving average, but once again, you saw there from the volume in the NASDAQ, very weak and very small. The financials still very bearish under that FHFA lawsuit and worries about where is the contagion on the Greek default. The base recount list hasn't gone anywhere. And then in the gold member section, we're going to look at the trade ideas for leaders and laggers in the following two sectors and in some stocks as well.